Every trader dreams of making it big, but very few survive long enough to even understand the game. This market doesn't reward speed. It rewards endurance. You hear stories of overnight success, but the truth is simple. Most traders don't fail because they're bad. They fail because they burn out before they even get good. Trading is a long-distance fight, a grind, a test of patience, discipline, and self-control. The market doesn't need to kill you in one day. It just waits for you to exhaust yourself. And here's the punchline. Longevity beats brilliance. Every single time. Most traders don't blow up because the market is cruel. They blow up because they are. Let's break down the 3 silent killers. 1. Unrealistic timelines. Everyone wants to make it in 3 months. They treat trading like it's a slot machine that owes them a jackpot. But this is a skill-based game. And skills take years, not weekends. The pressure to succeed fast forces traders into reckless decisions. They rush the process, and the process punishes them. 2. Emotional exhaustion. You've seen it. The trader glued to the screen for 10 hours, eyes red, brain fried, clicking buttons like they're playing a video game they can't quit. Every loss hurts. Every win makes them overconfident. Every candle feels personal. By the end of the week, they're not trading strategies anymore. They're trading emotions. And emotions are terrible traders. 3. Financial self-sabotage. This is the big one. Risking big to win big. Sounds heroic. But in trading, heroism is just a quick way to meet your account balance in heaven. Small gains? Ignored. Small losses? Ignored. But one oversized position? That's the end of the story. Revenge trading, tilt trading, doubling up, is basically you punching your account for the mistakes your brain made. Burnout doesn't happen suddenly. It's slow, sneaky, cumulative. And by the time most traders realize it, the market has already moved on without them. If you want to last in this game, you need more than a strategy. You need a structure that keeps you alive even on your worst days. These are the 4 pillars every long-term trader stands on. 1. Risk management discipline. This is your oxygen tank. Small risk keeps you in the game long enough to actually learn the game. The moment you start sizing positions based on hope, fear, or vibes, you're already digging a grave for your account. Remember this law of survival. Money lost slowly is recoverable. Money lost fast is a funeral. Your first job as a trader is not to get rich. It's to stay alive. 2. System consistency. Every new trader has a favorite strategy until it takes a loss. Then suddenly they're switching to something else, and something else, and something else. A trader who changes systems every week isn't evolving. They're running. Pick a system. Stick with it. Refine it. Don't abandon it. Consistency is what turns randomness into mastery. 3. Emotional conditioning. The market will attack your emotions long before it attacks your capital. Learn to step away. Journal your decisions. Take breaks before your brain starts overheating like a cheap laptop. And when in doubt, breathe, not trade. This is a marathon. You can't sprint every candle and expect to survive the distance. 4. Capital preservation mindset. Your goal isn't to double your account quickly. Your goal is to avoid blowing it up completely. Pros think in decades, not days. They don't chase every setup. They don't feel forced to trade, because they understand something most beginners refuse to accept. If you can protect your capital will eventually protect you. Surviving the market isn't luck. It's a deliberate lifestyle. A set of habits that keep your mind sharp, your capital safe, and your emotions calm. Here's how you build real endurance. 1. Set process-based goals, not profit goals. Profit goals make you desperate. Process goals make you disciplined. Instead of saying, I want to make $500 this week, say, I will take only A+ setups and review them every evening. Focus on the actions you control. The money arrives naturally when the process is consistent. 2. Schedule breaks. Your brain isn't a trading bot. Every trader becomes stupid after their 6th hour on the screen. Fatigue kills judgment. Judgment kills accounts. Walk away, touch grass, stare at the ceiling. Whatever resets your brain, do it. Sometimes the best trade you'll ever take is the one you didn't take. 3. Review weekly, not daily. Daily review makes you emotional. Weekly review makes you objective. Zoom out. Patterns become clearer. Mistakes become obvious. And your confidence grows because you're no longer reacting to every tiny win or loss. 4. Learn to sit out. Patience is a position. Silence is a position. Doing nothing is sometimes the smartest trade you can take. If the market isn't giving clear setups, why force it? And if you struggle to stay out, here's a trick. Sit on your hands. Literally. It sounds silly, but it works better than half the indicators on TradingView. 5. Build a routine that stabilizes you. A specific time you trade. A specific time you stop. A checklist before entries. Post-trade journal. A cool-down ritual. Routine creates calm. Calm creates clarity. Clarity creates longevity. Most traders think longevity comes from the perfect indicator, the perfect entry, the perfect setup. But the traders who survive the longest understand one thing. You don't last in this game because of your strategy. You last because of who you become. 1. Build the identity of a professional. Professionals don't chase thrill, they chase precision. They don't trade because they're bored, they trade because their setup is present. They don't celebrate wins too loudly, and they don't mourn losses too deeply. They see themselves as craftsmen, not gamblers. When you adopt that identity, your decisions start to align with longevity automatically. 2. Detachment is your superpower. The moment you stop taking every candle personally, you stop bleeding emotionally. Detach from the outcome of a single trade, the need to prove yourself, the ego that wants to always be right. When you stop tying your self-worth to your P&L, you stop making desperate decisions. 3. Treat trading like a career, not a lotto ticket. People who treat trading like a shortcut don't stay long enough to see the long road. But when you see trading as a craft, you allow time to shape you. You accept slow growth. You embrace repetition. You focus on improvement, not dopamine. And that's when endurance becomes natural. 4. Think in years, not days. Ask a new trader how they're doing. They'll show you their last 3 trades. Ask a professional how they're doing. They'll show you their last 12 months. Longevity comes from zooming out, from realizing this game is infinite. And you're not here to win fast. You're here to win long. Most traders disappear because they want to hit it big. But the ones who stay, the ones who rise, are the traders who master patience, humility, and identity. Survival is the real skill. Profit is just the side effect. Anyone can make money once, but the ones who last, they're built differently. This game doesn't reward the loudest trader, the fastest trader, or the one with the fanciest chart. It rewards the trader who can stay calm when everyone else is panicking, the trader who keeps showing up long after others have quit, the trader who understands that survival is strength. You don't need to be perfect. You just need to avoid self-destruction long enough for your skill to catch up with your ambition. At the end of the day, you won't last in trading because you grew fast. You'll last because you broke slowly or didn't break at all. Every trade you take is a test of character, patience or impulse, discipline or chaos, ego or wisdom. The market has no deadlines, no finish line, just you, your decisions, and time. Longevity isn't a goal, it's a mindset, and the moment you adopt it, you stop fighting the market and start thriving in it. Last long, trade smart, and live to trade another day.